just when the equities market was celebrating the positive sentiment which dominated 3 sessions since the beginning of the week. The celebration was short-lived as the market indicators kicked off Thursday's trading with a positive note, no thanks to renewed profit-taking by some investors. Over 20 billion naira, that's the amount lost from sell pressures in 28 equities across board out of the 5 key sectors of the equities market, which also reflects a marginal 0.08% decline on the all-share index. The loss recorded today was mostly dominated by big players in the financial services sector, led by insurance company Prestige. It is closely followed by Farmdeco from the healthcare sector that made it to our top 2 losers of Thursday's trading. Meanwhile, the share price of NEM and Cordville, who led our top gainers for today, could not salvage the market from losing. Nevertheless, they had a combined gain of 22 kobo at the close of trading today. Moving on now to our activity chart, market summary, it says a total volume of 238 million units of shares valued at over 2 billion naira, exchanging hands in a much lower deal from the previous session, that is 3,927 transactions today. Moving on to our global market, that's the FTSE, Dow Jones and the Nikkei, it's all in the negative. Economic clouds rolled over the London market during today's trading session, sending the FTSE into a sea of reds as heavyweight mining and banking stocks took a beating on fears that the inflation and COVID recovery might not be as strong as hoped. That's why it's recording a 1.68% decline. US stocks also shared previous sessions gain yesterday. It was in the positive territory, and that's because investors grew fearful that the electric global economic rebound could be slowing down. That's why it's in the 0.57% declining territory. Japan stocks Nikkei, it's also in the negative just like previous session. That's as the country's plan to reintroduce a state of emergency to contain the resurgence of COVID-19 infections is stoked worries about an economic slowdown, and also it's in the 0.16% decline territory. That's all on stock market review.